Hello, and thanks for tuning in again. I thought we'd do a little bit of weekly chart bar by bar price reading today. I've chosen a chart WES. It's a large cap ASX stock, and I've chosen a starting point just prior to when the coronavirus began to emerge around the world, because there was a big event following it. And it's interesting to read the chart now, bar by bar, and watch the event take place and see how the markets handle it. So you can see this market has been in an uptrend. It's definitely trending higher, and there's a period of bullish absorption through here by the looks. And you'll know that that means that the market is absorbing its way higher, it's grinding its way higher, and it's characterized by a pressing nature towards the upside, which it does have, and clusters of closes all at a similar level. You'll see this a lot. This is a period of absorption taking place, only a narrow spread up bar. And then the other thing that characterizes a period of bullish absorption is threatening down bars which don't have any downside follow through in response. And you can see each time these wider spread down bars don't have any downside follow through. Instead, the market pushes higher in response each time. And that's another characteristic of bullish absorption that you'll see quite a lot. Price continued to grind higher here. And as far as I can remember, this is where there first was some questions about the coronavirus emerging around the world. And it wasn't particularly serious in this week. You can see that volume was above average, but it's nowhere near the highest volume. If you look across here, I've got 50 bars up, so there's a year's worth of data there, and it's not one of the highest. Price has closed off its high, so there's been supply drawn out in the top of the bar, no doubt, but it doesn't appear too serious at this point. We'll go ahead and look one more bar forward. You can see that price has broken down here. Spreads increased considerably and it's gapped down. There's the gap. Gapped below the low of the previous bar quite easily. The market has stretched lower in search of enough buyers to satisfy the sellers. That's what generally happens when markets really stretch lower like this. Volumes increase considerably. People have decided to dump shares or reduce their positions to some extent, and there's not enough buyers in the market. The news is probably poor, and the market has to stretch lower to find enough buyers to satisfy the sellers. There would have been some people buying in here, there's no doubt, but they've been overwhelmed by the selling pressure. We'll go ahead another bar. Now spreads narrowed considerably on this bar. Volume's reduced a little, but it's still quite high. The close is right at its lows for the week, which is probably a poor close, although there are times when the market does that deliberately to create a bad gut feel for the weekend, and then price closes higher in response to next week. And that could happen this time. You'd have to wait and see. You just don't know for sure. However, we know that the coronavirus events took place over an extended period, so I'm sure you've worked out already that we're going lower. So we'll just quickly look at the next bar. You've got a much wider spread, and price has swept lower before recovering somewhat and closed back up in the top half of the bar on very high volume. Now you can see the volume is the highest for a year, easily the highest for a year. That's very high volume. This is a large cap, very liquid stock, and that's very high volume, no doubt about it. Now I imagine that some people who did buy in these two bars have sold out and they've dumped their shares, and that's what's caused this market to accelerate lower, at least initially. And then the market has found buying support off the lows and closed back up, right up near the highs of the bar. The market's fallen from around $44 to $31, so it's a pretty substantial fall over 3 weeks. But buying support's come in. Now, at this point, I would suggest that, as a rule of thumb, where you see buying support come in, which is about here, below this level, you've got support, and above this level, you've got supply. So if the market comes back to these levels, I'm expecting supply to be drawn out at this point in time. And when price trades below this level, there's likely to be further buying support in the market. So that's your rule of thumb at this point in time. And that can change slightly, or you can fine-tune that level slightly as time goes on and you see subsequent price action. We'll go ahead, another bar. Now this time spread has narrowed and traded within the range of the previous bar. Volume is even higher, but the market has closed poorly right down the bottom of the bar. Now, on this bar here, first up, the market has initially swept lower and then moved up to close up near its high. The sellers in the market have generally sold by now, so the news must be very bad for there to be even greater volume on the next bar and price to close very low. I expect that the news continued to be bad, and that would also be played up by the professionals in the market who are probably looking to buy this stock, or they are, because we saw buying in this bar. That's not to say the market couldn't continue lower, and it looks like it may even push a little bit lower here in response to this poor close. But with the buying over 2 bars now, remembering this bar has a narrower spread and higher volume, if that was all selling, this market should really have broken down further and had a much larger spread and pushed down like this with increased volume. But it didn't do that. So I expect there's buying support in the first bar and continuing buying support, although perhaps you might say tentative support in the second bar, and the increased volume has forced a poor close down by the lows of the bar. Go ahead, 1 bar. Now this time price has pushed below the lows of the previous 2 bars. Here's the lows. I imagine price has moved straight down like this. Anyone who bought on this bar and decided to place a stop in here has probably been taken out. Then the market's done a massive buy the offer, up like this, up to the highs of the range, and then the market's been allowed to drift lower into the close to make it appear poor, to leave a bad gut feel in the market. Anyone who had bought in there may consider just selling again because there's a feeling that the market's going to continue lower with the close well off the week's high. So I would expect this was a shakeout at the bottom, down here, below the previous lows, a massive buy the offer bar up to here, and then the market's been allowed to drift lower into the weekly close. Okay, you've got another buy the offer bar here by the looks. The market's pushed up like this from the previous close and then drifted lower into this week's close. So I would say you've got buying in this bar, tentative buying in this bar with some selling sort of balancing it out, a shakeout and buy the offer in this bar, and a secondary buy the offer in this bar. This, for me, is accumulation. It's not easy to see, and you have to sort of make the narrative up and then follow it through and look for confirmation. But at this point, that's buying support. That's accumulation. That's buying. We'll go ahead a bar. Our volume's reduced now and prices pushed up really only to the highs of that bar. So it's just when the market's allowed to drift lower like this after a buy the offer gets restacked again. And then they've bought the offer up again, but it's not as vigorous this time. And you can see on the volume, it's not as high because people who are going to sell and have been panicked out of positions or whatever have pretty much done so by now. So this whole area in here doesn't have very much supply left. I expect that there'll be minor resistance there and more serious resistance here. So I expect there will be some difficulty through this area, but once price moves up and trades adjacent to this bar, I expect that resistance will become more difficult and it will increase again up at this level. Although some of it will have been sold when price swept lower on this bar. So it won't be as high as you might expect, but it's human nature not to easily take a loss. So I would expect some people are still holding in here, for sure. Some people are. Next bar. Spreads narrowed again, volumes reduced again, and price is just grinding its way above this level and before this level, because there is going to be some minor supply drawn out through here, but the volume at this point is below average, well below average. People who are going to sell have done so, and there's not as much supply there as you might have expected, at least not so far. Next bar. Now you've had some sort of shakeout here. Prices pushed lower and then recovered up to close mid-bar. And volume has increased, but it's still below average, so not very much supply has been drawn out. This is the market's way of clearing any supply from above so that it can push higher with relative ease. Now, if increased volume had been drawn out, the market might have to push lower and challenge those sellers like this. But volume was relatively low, so I expect the market may attempt to push higher in response. That's an absorption bar in my book. Here's where the resistance is expected. Here's where it will increase above this level. Price has pushed higher and then been allowed to drift lower. So, yes, it's a sort of buy the offer bar, and it may be achieving that same goal, but because we're at resistance, we're not down where the buying was taking place, sort of down here before. We're up at resistance, clearing a path to attempt to move higher in response as far as the process goes. But at this point, the narrative is buying support, tentative buying, a shakeout and buy the offer, another buy the offer bar, the completion of a push up to the highs of the range, and now the market's attempting to absorb supply from above to clear a space where it can move higher with relative ease. We go ahead a bar. You've had a little test in the bottom of this bar here. There. That would have been an early test for supply in the week. Volume was reduced, so not much supply was drawn out, and that's allowed the market just to push up and close positively for the week. So this is a good sign that there's not much selling pressure, at least at this level and below in the market currently. Anyone who is going to sell has done so at this level. There may be sellers above, but at this level, let's say from here and below, pretty much the sellers are done. It would most likely require some really serious bad news to emerge again now to force this market lower and shake out some more supply. We'll push ahead a bar. Now price is grinding here. You can see that the trading below the previous bar's close was a little test for supply, probably early in the week, and that's allowed the market just to move up gently on very low volume. Selling pressure remains low. Here's the level the market is attempting to clear out so that it can push through, and we're expecting supply above if the market's strong enough to come up and challenge that level in the future. So that was a test for supply and a little absorption to grind higher overall. The price pushes up again in response, and you can see that volume was very low, so there's very little selling pressure in the market. It's moved through that level pretty clearly. It's done so on really low volume because there's very few sellers in the market. The market's pushed higher again here, and it's beginning to challenge this level for the first time since the serious issues came about down here. Now, volumes increased considerably up to the average, but prices closed off the highs, so some supply has been drawn out, which you would anticipate at this level. Now, what happens on the next bar will tell you how comfortable the market was at absorbing the supply. If the market pushes straight back down like this, then the supply was overwhelming. If the market continues to grind higher like this, then it feels comfortable, it's able to absorb the supply as it moves higher. Next bar, continued higher. Now there was a test for supply early. You can see it here below the previous bar's close. If you were on a daily chart, you would have seen probably the first day or at least half day's trading testing for supply. Volume was below average, it reduced, spread increased, and the close was much more positive this time. So not very much supply was drawn out above this level, at least so far anyway. Next bar, continued higher. This time volumes increased to average down here, but the market's closed well off its high, and there was no test for supply this time down below the previous bar's closed. The market's attempted to ram higher effectively, and it's drawn out some supply by the looks from this level. So now you would expect the market to come back and test or even shake out if the supply is serious and ongoing. You'd expect the market to come back now and test for supply. And it did so, but it's a quite strong market at the moment. The trading below the previous bar's close was a test for supply and possibly a shakeout because it moved below the previous bar's low and then recovered. Volume was very high, well above average, so supply has been drawn out. There's no doubt. The pullback here and mini shakeout was challenging the sellers to come out and sell. If they're sitting up here and the market starts to move lower, that encourages the sellers to come out and get their selling done at the higher price rather than allow the market to roll over and then have to take a lower price or continue holding. So when price shakes out like this, it's not just to grab stops, it's to challenge the sellers to come out and finish their selling. Now the very high volume here and not particularly widespread suggests that during the shakeout there was supply drawn out and the market may have to come back further, at least test for supply again before it goes higher. Markets will rarely continue higher sustainably when increased supply is being drawn out. And there was only a small test for supply by the looks. That would be below the previous bar's close here, and then a push higher. Volume reduced to below average, and that's probably why the market was allowed to push higher and close as an up bar for the week. So this market is quite strong at the moment, and this buying back down here is strength in the background. This is buying. This is the cause, this is the effect. And I expect the market will attempt to push up into this range at some point. The market accelerated high here. Volume remained relatively low. There was a test during the week below the previous bar's close, and obviously very little selling pressure was found. That allowed the market to push higher on fairly low volume, really, reduced volume, and the market has pushed up to the previous close up here where this whole pullback began. So this is quite a impressive push higher now. And when you have a big strong up bar like this, quite often that will draw out supply of some sort, even if it's people who are thinking of going short the market here because they think it's overextended at this point. Now, supply generally comes in three forms. It comes from the left, which is people who have been locked in losing positions. If you bought in this bar here, then the market gapped down and accelerated lower. You've been in a losing position all of this time until this bar comes out. You'll also get supply coming from profit taking for people who bought down here and are now taking profits. And you'll also get short sellers who figure the market's done as much as it's going to do, or they may be expecting bad news to emerge again and push price down, or just feel that price is overextended in the short term and expect price to move lower for a period before pushing higher again. We'll go ahead a bar. Now this is, there was a little attempt to move higher here by the looks, but there was no demand for higher prices. Volume was low. Now this isn't a no demand bar. This just means the market wasn't supporting higher prices at the time. It probably does want to test here, probably something like this, and see how much supply is actually drawn out. So this wasn't necessarily no demand with weakness in the background. Yes, there was weakness here, but in the current background, you've got strength from all the buying that took place here, strength in the background, and no obvious weakness. So there was just no support for higher prices this week, while the market prefers to see how much supply is drawn out in response. Next bar pushes higher modestly. Volumes increase to a fraction above average. Spreads not very wide. It has closed just above this stronger bar's high. So I'll probably call that an absorption bar at this point. It's not really a strong up bar. It's closed almost closer to mid bar than it has the highs. So you may find price comes back in response. We'll just wait and see. You've got another absorption bar, a bit of testing in the bottom, a bit of lack of support for higher prices in the top. A nothing bar really. And once again, a similar thing. This is a period of absorption taking place by the looks. And it's quite strong because the market's, here's the push higher, and here's about 50% of that level. If the market can consolidate above the 50% level, it's relatively strong. And if it consolidates right up at the highs, it's really strong, generally. So the market's absorbing supply sideways. There might be a slight pressing nature to the upside, but it's really sideways at the moment. The next bar is a test for supply, clear test over a whole week. Doesn't take place very often, but the market continues to consolidate sideways in response to this quite large move higher. The next bar pushes above those levels. It's not a really strong push higher, but it's pushed out the top. It's the highest of the closes recently, and it's just challenging this high here. So that's a push higher. Volume is relatively low, so selling pressure appears to be low. And we'll look at the next bar. Next bar is an up bar with increased spread, increased volume, and the close a little off the highs. Prices moved above this sideways range and above this range. The close off the high suggests a little bit of supply has been drawn out, which isn't surprising when price moves up like this. Have a look at the next bar. You might have to finish this up shortly. Yes, you've got increased volume down here, narrower spread, poor close as a down bar below the previous bar's close. I would suggest that supplies come in here, and we might just whiz forward and just see what actually happened, so you can see what's happened in response to the buying support down here. Yep, you've had some supply come in. It looks like support's coming in now. Narrower spread, increased volume. Price starts moving higher again. And it's moved above that level now where supply came in previously. And I doubt really that the buying support's playing much part in that now. It's over a year ahead. So the price moves up to $65 in the end. So that's a fair jump from $30 just below at its lowest point down here. Okay, that's a lot for now. Hopefully that was worthwhile watching. Thank you very much. See ya. Bye.